All right, well, it's Monday. Normally I'll sell or roll the options on Tuesday, but I had to make a quick little video because I guess Trump made a deal with China on the tariffs today for a 90-day pause, and the market went nuts, skyrocketed. So I'll have you take a look here. The Dow right up here went up 2.81%, 1,160 points. That is a lot. The S&P went up 3.26% in one day. That's huge, huge. So Carnival, of course, went up. Everything went up except for a couple things, but Carnival went up $1.94, so it's at 22.13. Went up 9.61%. That is massive. So I'm just making this little video because normally I'll make the video on Tuesday, but I had to make a little video about this today. So it's not good when a stock moves that much when you're selling options or when you have options sold and you have them out there. So the strike price is at 20.50 and the stock price is at 22.13. Not good. Not the end of the world. I mean, I can totally work my way out of it one way or another, but if I have to let them go at $20.50, that's 50 cents higher than I bought them at, and I've been making money on the options for a while now, so it's okay. And I'll wait for a dip and I'll sell puts and I'll get back in. I'll get the shares back. No big deal. So we'll see what happens tomorrow, but I wanted to just make this quick little video on this Monday, the 12th of May, to let you guys know what's going on. All right, we'll see what happens. Hey, what's up, guys? So, as you saw yesterday, Monday, the market skyrocketed. It went up a lot. I mean, way more than usual. So today I'm thinking, oh man, those options, I'm going to have to let them go and just take the $20.50, the call options that I have 17 options out on. But then I look and not what I thought at all. So I actually can make a little bit of money just by rolling it. So there's three options you got, really. Let them go at your strike price, collect the price of your strike price, let it end, and then wait for a dip and try to get back in. Second option is to roll the option, like I've been doing in my other videos. But I mean, it was so far in the money. In the money meaning our strike price is $20.50 for the call options. Anything above that is considered in the money, and it's like $2, over $2 in the money. So about $2. So I didn't think I'd be able to get anything, which is normally the case. But the volatility being so high, it helps with the premium, so the prices go up. And this also happens with when it's earnings season. So when a stock has its earnings, the premium goes up because nobody knows really what it's going to do. It could go up, could go down. People have ideas, but it brings the volatility up, which brings the premium of options up. So I thought that was the case. So you got those two options, and then another option would be, so you got to just let it go, take the strike price, whatever it's at, roll the option. That's what we're probably going to do, or buy back the option, which when it's that much in the money, the option normally is pretty expensive. So I never want to spend money. I always want to make money. Some instances, if it's a few cents to move up the strike price and pay a little bit, I wouldn't mind doing that, but not the case we're in right now. So let's see right now how much I can make. I'll roll the option to the next week, and we'll see where we're at. All right, here's the market today. So, I mean, the Dow's down, but the S&P 500 is up almost 1%. It's like 0.86%. Carnival Cruise Lines is up 1.97%, 44 cents. So that's good for the shares that I don't have out on options right now. So let's go to the options on Charles Schwab. So here's the ones I'm looking at. The call options right here I have out at $20.50 strike, 17 options, and let's see what we can do when we roll the options. So we're gonna roll position, continue, let's see what I can get here. All right, it's at 8 cents, so it shows I can get. The bid is 13 cents, the ask is 4 cents. So that would give me $136. And gosh, I'm sweating in the back of this truck, but 136 bucks. But it gives me another week to see if the stock adjusts and maybe drops a little bit and puts me in a little bit better position. So I'll squeeze a little bit more money out of this before I have to let it go and let someone buy the shares. So I'll do that right now. And so 8 cents, it's showing 9 cents now. So let me bump it up and see. That'd be $153. Buy to close, 17 options. So we're moving it from May 16th for the expiration to the next week, May 23rd. Keeping the same strike price, $20.50. It would cost me money if I moved it up to 21. So let's do this. Place order, and we'll check the order status, and it did not fill. So we're going to change it back to 8 cents. So move it down a penny, I'll get the 136 bucks. It should go through. Check the order status, and filled. Okay, 136 bucks. And it gives me another week's worth of time to see if the stock goes down a little bit. You know how things are right now with the tariffs and everything. They can put out bad news, something that the market doesn't like, and it can drop. Thank God I don't have to be in that UPS truck today. All right, got the day off of work today, so I'm at the house. Crazy day in the market this week. Monday was nuts, as you guys know. The market skyrocketed because of the deal with China on the tariffs. Well, the 90-day deal anyway. So we'll see what happens there. But I sold the 17 call options yesterday. I rolled those. Today is Wednesday, the 14th of May, and I'm going to sell the puts that I got left for the week. So I'm going to show you that now. The strike price on those were $17. So the price of the stock is way above $17. So if I just let it expire on Friday, it would just end and the cash would go back into my account. I'm going to roll them for next week and see what happens, make a little bit of money, squeeze a little bit more money out of there. But basically I can raise the strike price and make a little bit more money, a few more cents. So I'll make a little bit, and we'll see what happens next week. So I'll do that now. All right, I'm looking at these 17 strike puts. Got 10 of those out. So I'm going to roll the position right here. All right, continue. So the first leg, buy to close, 10 options. The expiration is this Friday, the 16th. The strike price is, like I said, $17. So I'll buy those back, and the second leg, sell to open, and then I'll sell them for the next week, the 23rd expiration. So that'd be the week after. And I'm going to change the strike price to $20.50. So I'm going to move it up closer to the price of the stock, because then you get more money. It just puts you in a better situation. I don't think it'll go below that. I think it's going to keep moving up, to be honest with you. That's just my opinion. So buyback is 1 cent. The middle here to sell is 6 cents. So actually I'm going to, well, I don't have enough cash in my account to cover, because when you move it, the strike price from $17, when you move it from $17 to $20.50 strike price, you have to have the cash to cover because I have 10 options, so that's 1,000 shares. So I need to have the cash to cover 1,000 shares at $20.50 as opposed to $17. So I'm going to sell the 10 options, and I'm gonna buy the 10 options, and I'm gonna sell 8 options because I'll have more cash to bump up the strike price. So that's what I'm doing. All right, so I will change that to 8. So I'll buy back 10, I'll sell 8. And I changed the strike price to $20.50. I gotta change one more thing. So that would be, I'm buying these back for 1 cent. 10, that's 10 cents combined. I'm selling these at 5 cents. I'll sell them at. So it goes through. That's a difference of 4 cents. So that would be $30 I would make on those. Which is $40. So I'm going to change that and move this down till it gets to $30. All right, so let's see if I can make 30 bucks right now. So review order. Buy to close, 10 options, Carnival Cruise Lines, expiration of the 16th. I'm buying those back at 17 strike price put, and I'm selling these 8 options at the week after that at the changed strike price of $20.50. So let me place the order, and I'll check the order status, and it was filled. Okay, so there's 30 bucks there. Close that, and then we're going to go to those 2. I'm going to move those to that strike price is $18.50. I'm going to move those up to the same strike price that I just sold the other ones at, the $20.50. I'll think or swim. Let's see here. All right, so I'm going to buy these back at 1 cent because these are pretty much worthless because they're so far away from the price of the stock. And then I'm going to sell to open. I'm going to change the strike price to $20.50, same as the other one. So then I'll have 10 out at $20.50, 10 options out. So that would be $8. So I got to change this down to 4 cents, $8. That's fine. So $38 total. It's not much at all, but I'm so far away from the price of the stock on the strike prices. That's just what I got to do. And then if the stock drops next week, it'll put me in a better position. But I might as well make a little bit of money now. Might as well squeeze out a little bit more money out of these options before I have to let them expire, and then I can just move them to whatever strike price I want. But when the stock goes up that high, that quick, I kind of want to have at least a $2 strike price below the price of the stock. So just for safety. Okay, so buy to close, 2 options, changing the strike price from $18.50 to $20.50 for the next week out. Place order, so this would be for $8. All right, Thinkorswim. And then we'll see if these go through, and that's filled. Okay, cool. So all right, done for this week. So made $38 on the puts, and the calls, the 17 calls, I think I made, I forget what it was, it was around 130 bucks on those. So what, around $170 for the week. Not bad, I'll take that. So we'll wait till next week, and we'll see what the repositioning of the strike price has done, how it's helped us get us closer to the price of the stock, and hopefully the stock doesn't move too much down or up. But the market's moving up. We'll see what we can do. I mean, they're taking care of these tariffs, and lots of things are going on in the world here, so it's affecting the market. So you always got to watch that, watch the news, watch the market, watch the trends, watch all that. Just a few times a day, just keep up on that, and it'll affect how you're selling the options and your stocks and all that, all your investments. So, well, have a great week, and I will get with you guys sometime this weekend and make another video and for the setup of next week. So you guys have a great rest of your week, and I'll be talking to you soon. So if you would please subscribe, that'd be great. Spread my channel, tell people, like, share, all that stuff. All right, you have a great day, and I'll talk to you guys later. All right.